The government, along with Belt and Road Initiative, as well as Made in China 2025, there's a strong focus on opening up the capital markets. You know, we've been talking a lot about equities. The fixed income market is going to be very interesting going forward. But to give you an indication of this capital markets opening up, earlier in your winter, my summer, we saw the introduction of what they call the STAR board or bourse. And essentially, the Chinese government and regulators want it to be a Nasdaq. The listing rules are slightly different to Shenzhen, Shanghai, and Hong Kong, but it's called STAR because it represents Science and Technology Innovation Board. And we're seeing a number of companies now actually list, IPO on the board, and that is really interesting in terms of that whole highlighting the innovation space. Because the investor base is becoming more sophisticated slowly, but we are seeing more interest from the mainland Chinese investors. And don't forget, with A-share inclusion into FTSE as well as MSCI, you've got that foreign interest now in China and obviously the rest of Asia too. There is going to be more scrutiny on what the companies deliver. When we look at the IPO market, it's year to date down from last year, so about 22 billion versus 28 billion. And blockbuster deals have been delayed, some more recently as a result of some of the uncertainty regarding Hong Kong. So the biggest deal this year is Budweiser. And they wanted to come to the market in about June, July, 10 billion US. They pulled it because of the sort of not as much interest as they hoped, and then coming to the market at 5 billion, so half of what they expected. But the big blockbuster IPOs, in fact, a client yesterday asked me about one that he heard was coming, but our analyst said, no, that the set date's still next year at this point in time. But it's called ByteDance, B-Y-T-E Dance. And most Australians have probably never heard of this unlisted company. It's one of the best, well-known, profitable companies in China at the moment. But I'm sure many parents have heard of TikTok. So it owns TikTok. And so that's the international business. They have a domestic TikTok version under a different name, and they're also a newsfeed or a news search. So they're now competing with the likes of the search aspect of WeChat, i.e. TenCent. And this goes back to that competitive intensity, how you can have, for example, an online food company recently IPO'd, all of a sudden cutting into the lunch of Ctrip, which is a well-established online travel company, and the food company now offering low-end hotel rates to customers. And so that's what's key investing in China. It's great for Chinese people in terms of all these services and e-commerce sites, but from an investment perspective, you have to be really mindful about those companies who can have somewhat sustainable earnings going forward.